Welcome back to Wally Trades, traders. Are you guys staying productive or just trying to survive? Let me know in the comments, what was the best thing that happened to you this week? In today's video, I am gonna share with you on how and why trading with as little as $100 is possible and can be made profitably. Trading forex with small account, such as $100, requires you treating the capital as starting up a new business. To make it successful and profitable, there are a few factors that must be learned and applied. A small trading account relies on flawless risk management, micro lot sizing, rather than chasing massive, instant gains. Follow these 5 steps to trade and grow your account on a small scale slowly but surely. Let's go into the details. Step number 1 is, always start with a forex broker that offers micro lot account. A micro lot trading account allows you to execute positions of 1,000 units instead of the standard lot, which is 100,000 units. A 100 pip loss is often worth just $10 if you are trading 1,000 units. If you are trading 100,000 units for standard lot, it's $100. It is ideal for beginners and strategy testing. You need a broker that allows micro lots trading because all you have is $100 as your starting balance. Look for brokers that also support minimal cost of deposits or withdrawal. You can find almost all major forex brokers out there that are dollars friendly, where you can start trading with only $100. These brokers also offer lower to near zero minimum deposit threshold, as well as commissions-free accounts to trade with. This is not a bad start, considering what you have and willing to risk in order to trade forex. Step number 2 is mastering leverage and position sizing. $100 is too small to absorb wide losses or high fees. With as little as $100 as your initial capital to trade, you must use leverage. Leverage serves as a double-edged sword. It increases your buying or selling power, but at the same time, it also increases how fast you can lose your money. A over-leveraged trade can wipe out your money in an instant. At the same time, an under-leveraged account does not grow your money exponentially. A word of advice: always use leverage responsibly and with the amount of money you are willing to lose, in case the trade does not move your way. There is a saying, better safe than sorry. You must learn to preserve and save your capital for the next trade if the prior trade does not work in your favor. Now, let's do the math on how to leverage a $100 forex account. A standard lot is 100,000 units. A micro lot, 0.01, is 1,000 units. A pip price movement generally equals to about 10 cents in a micro lot account. When you open trades with micro lot, market fluctuation is kept minimal compared to when you open a 0.1 lot or 1 lot size position with $100. Imagine a 100 pips movement that goes against your trade within a few seconds trading a 0.1 lot size. This could seriously wipe out your account in an instant. Any minor market movement can trigger an immediate margin call or stop out in the worst-case scenario. When starting small, survival comes before making $1 million. This is where you should always implement the rule of 1% risk on any single trade you are going to enter. Calculate exactly how many lots to buy or sell based on your stop-loss distance. If your entry is $100 and your stop-loss is $97, your risk is $3 per lot. Aim for setups where you make $2 to $4 in profit for every $1 you risk. Focus on consistency, rather than large, lucky wins. This leaves you with enough capital to survive a losing streak, without wiping out your entire account. Sticking to major currency pairs, such as Euro-US dollar, or GBP-US dollar, when trading a small account, is better because of their high liquidity and tight spreads. Major pairs have highest trading volumes, meaning brokers are willing to offer tightest spreads. Brokers' fee for executing a trade, or better known as spread, can quickly eat away your small account if you trade high-spread pairs, such as often found in minor or exotic pairs. By choosing major pairs to trade, you get to keep transaction costs low. This in return protects limited capital being forced to over-leverage. It is also easier to manage risk by trading major pairs, as they display consistent, predictable price movement. Lastly, to trade with $100, you need to focus on growth and compounding. Growing a small account requires a strategic phased approach in percentages, not dollar amounts. The main and safest approach is to aim for a modest but consistent monthly return of 5% or 10%, which is $5 to $10, through 2 to 3 well-planned trades. By avoiding the temptation to gamble, and instead reinvesting your returns, you harness the habit of compounding your account over months and years. This is the power of exponential compound growth. Compound trading immediately increases your position size for the next trade. A 5% gain on $100 is only $5. But as your trading capital grows bigger than your initial fund, that same 5% represents a progressively larger dollar amount. Imagine if you get an average return of 10% every month within a year. You do not need to add any extra fund into your trading account. This is the snowball effect of compounding and reinvesting your profits. Before risking your actual $100, master your trading setups and prove your strategy works on paper. It is important to test your strategy in a real-time simulator. Open a demo account on any platform with a virtual $100. I believe there are many to choose from. Execute 50 to 100 simulated trades, using the same exact risk variables you wish to use with your hard-earned money. Never trade with real money until you have proven you can be profitable. That's all for today's video, traders. If the strategy makes sense to you and is going to help your trading, hit that like button. Subscribe for more setups. Don't forget to turn on notifications so you never miss a market move. Click on the video popping up on your screen now to see my top trading tips. Let's get those pips by this week. Until next time, trade safe and stay disciplined.